So welcome back to corporate tax management class. So in the previous class I mentioned I will explain about the remaining topics, and one topic is set off, and another topic in this one only is carry forward of losses. Set off of losses and carry forward of losses. Yes, do you have any idea of set off of losses? What do you mean by it? Do you have any idea? Yes, do you have any idea? Nagajyoti is there. Subramanyam is there. Nagajyoti?
No, sir. No, sir.
Okay. Subramanyam, any idea?
So set off means something which is we have to show our present year loss in the assessment year's income tax.
No, not like that. Not like that. I will explain. How it works for you. I will show you with an example. See, let us take for example. I have, see, you know it. We have 4 heads of income. Okay, but we are dealing
Yes,
with
sir.
companies. No, we have only 4 heads of income. That is income from house property, then income from capital gains, income from business or profession, then income from other sources. These are the 4 heads that we are going to take into account while calculating the tax liability of a company. Is it clear, or is there any doubt in this one?
No, sir.
Yes. Okay. Now come to set off. What is set off means? See, suppose in a particular year, company did not earn profit under the head income from house property. Then suppose, let us take for example, income from house property loss is 10,000 rupees. Let us take for example. There is no profit on house property. They have lost, the company has lost 10,000. Then can this 10,000 be shown, deducted from the profits of any other income? That is income from other sources, or income from business or profession, or income from capital gains? That will
Yes,
be
sir.
that will be discussed under set off of losses. Set off means loss from one head. Can it be set off under other heads profit or not? Other heads income or not? That question will be answered by set off. But you mentioned income from house property, this business or profession. No? But see, this is the rule. This is what the rule says. House property loss, you can see it. House property loss can only be set off against house property profit only. You cannot set it under any other incomes. Please remember. This is what you mean by set off. Suppose in a particular year, let us take for example, try to understand this properly. In a particular year, there is loss under in house property that is worth 10,000 rupees loss occurred. This year, there is no second house for the company. Only one house is there. On this one house, 10,000 rupees loss occurred for the company. They cannot set it off against any other head of income. Means you can see it here. Income from house property, loss from house property can be written off, can be set off against income from house property. That's all. Against any other head's profit or income, you cannot deduct it. Is it clear? Is it clear?
Yes, sir. Yes, sir.
Okay. Now see, so this 10,000 rupees, can the company show it this 10,000 loss in next year also? Let us take for example, next year company earned 50,000 rupees profit from house property. Can this 10,000 be deducted from this 50,000?
Yes, sir. Quite possible.
Okay, that will be discussed under this carry forward of losses. See, This 10,000 rupees loss, you can show it up to 8 years. After 8 years, till this 8 years, if you are unable to recoup this loss from income from house property, you cannot carry forward it to next years. Up to 8 years only, you can write off this loss. So that is what you mean by saying carry forward of loss. So this loss can be carried forward up to 8 years. Up to 8 years profit of income, profit from income from house property, you can write off this 10,000 rupees. From 9th year onwards, up to 8 years, you are unable to write off this 10,000 loss. Then in the 9th year, you cannot show it. You cannot deduct from 9th year's income from house property this 10,000 rupees loss. This is what you mean by saying carry forward of losses and set off of losses. Now you see the definition. The Income Tax Act has laid down provisions for set off and carry forward of losses. Set off of loss means adjusting the loss against the taxable income. One head's loss you are going to adjust against another head's income. That rule will be defined in this Income Tax Act. Similarly, the taxpayer can carry forward the remaining loss to future years to set off against future incomes. That is what you mean by saying set off and carry forward of losses. This is the table. This table we have to remember. See, income from house property. Why in this table income from salary is not there? Can you say? Because under salary there will not be any loss. Please remember, in salary no person is going to lose. So that is why, okay, for company in any way, income from salary is not going to be there for company, but for any other assets also, there cannot be any loss under the head salary. Please remember. Okay. Now come to house property loss. House property loss can be set off against house property income only. From other heads, you cannot deduct that amount. Only this can be carried forward up to 8 years. Up to 8 years, you can show the loss. Did you understand?
Yes.
Yes, is here. Okay. Now let us take. Or do you want any deep insight into this one? Another example, shall I tell? Or did you understand? Yes, Subramanyam, you did not understand?
Yes, sir. I understood.
Okay. Nagajyoti, you understood?
Yes, sir. Yes, sir. One
Okay.
more example, sir.
Okay, one more example. Now let us take, for example, I mentioned in the year 2022, a company 2022-2023, a company has incurred a loss of 10,000 rupees on house property. So next year, company earned, let us take, for example, 15,000 from house property. This is the year 2023-24. The company has earned 15,000. Now, from 15,000, no, not the 15,000. You let us take, for example, only 5,000 they earned profit. From 5,000, you cannot deduct 10,000. Even if you deduct, you will get still 5,000 rupees loss will continue. Did you understand? Next year, income from house property you earned is 5,000. From this 5,000, you are going to deduct last year's 10,000 because up to 8 years you can show this loss. So this 10,000 you try to deduct from 5,000. Still 5,000 balance is there. This again, if at all in the next year, in the year 2024-25, if the company has earned, let us take for example 3,000 income from house property is there. Again from this 3,000, out of this 5,000, another 3,000 you can deduct. Still 2,000 balance is going to be their loss. This 2,000 again in up 2025-26, if at all income is there. Let us take for example in this year 10,000 rupees income came from in house property. From this 10,000, this 2,000 you can deduct. And in a gross total income, you can add only 8,000. So like this up to this 10,000 rupees loss, up to next 8 years, you can go on showing. Did you understand Nagajyoti now?
Yes, sir.
So that is what carry forward of losses means. You can carry forward the loss on income from house property up to 8 years. And you can set off this loss only against income from house property, not against any other heads of income. Now, second item of discussion is speculation loss. What is speculation business? What is speculation? Do you have any?
Speculation means anything, I mean, any transaction which is going to be an instantaneous one.
No, not it is guess. Business
Yes, sir.
based. Speculation means guessing. Tomorrow prices may increase. So the like that you will keep certain property with you, thinking that next year this property's value will increase. Take the case of real estate business. Take the case of gold, a cryptocurrency. Take the case of gold. Okay, you are going to hold certain property in your hand so that in future you will earn profit. You will earn more profit on that property. So in that case, in certain cases, you may incur loss. So that is termed as speculation loss. That speculation loss can be written off against speculation profit only. From normal business profit, you cannot write it off. Similarly, from normal income from house property, you cannot write it off. This loss you can show up to 4 years. Up to next 4 years, if chance is there, you can write off this speculation loss in your gross total income. Under the head speculation profits only, you have to deduct this loss. Did you understand? Yes, did you understand?
Yes, sir. Yes, sir.
Yes, sir.
Speculation loss can be set off against speculation profits only, and that too only up to 4 years. After 4 years, you cannot show that loss. You cannot show that loss in the 5th year. Okay, now come to this one, non-speculation business. Under this one, these are shown here. See, but see, normal business losses, you can see normal business losses can be written off against speculative business also, and against other businesses also you can show the normal business losses. But speculation loss you can write off only against speculation profits. Please remember it. Normal business loss, ordinary business loss, you can write off against speculation business profits also. But speculation loss only against speculation profits only you are supposed to write off. Similarly, you please remember all kinds of business losses, other kinds of business losses, you can carry forward up to 8 years, just like income from house property. Did you understand?
Yes, sir.
Yes. Okay, now coming to this normal business losses. Under normal business losses, another thing is also there: unabsorbed depreciation, scientific research and family planning expenditure. This family planning expenditure for companies, it is not going to be there. Depreciation, unabsorbed depreciation and scientific research and family planning expenditure, if at all it is there. See, these losses can be written off against any income. Means if at all any unabsorbed depreciation is there, on a machinery depreciation is there, depreciation is more than the value. Let us take for example, there is a loss on that machinery by way of depreciation. That loss can be written off against any income. It may be income from house property, it may be speculation profit, it may be normal business profit, it may be capital gains, it may be any income from other sources also. So unabsorbed depreciation, scientific research, family planning expenditure, if at all it is mentioned, these losses can be written off against any incomes, and there is no time limit. Please remember, for unlimited time, for unlimited number of years, you can try to write off those losses. Yes, did you understand? There is no time limit. Okay, for any number of years, you can go on trying to write off those losses. Did you understand?
Yes, sir.
Now next, short-term capital loss, you can write it off against short-term and long-term capital gains only. Please remember, capital gains can be written off against capital gains only. Similarly, you remember another point, short-term capital losses can be written off against short-term and long-term capital gains. But long-term capital losses can be written off against only long-term capital gains. Please remember this point. 2 points I mentioned. Capital gains losses can be written off under the head capital gains only. Similarly, short-term capital losses can be written off against short-term or long-term gains. But long-term capital losses should be written off against long-term capital gains only. Long-term loss you cannot write off from short-term capital loss, short-term capital gain. Okay, this too up to 8 years you can show. Up to 8 years you can try to write off the losses. Did you understand?
Yes, sir.
Yes, sir.
Okay, okay. Next one, last one. Loss from activity of owning and maintaining race horses. Sometimes companies tend to maintain race horses in order to win in racing. If at all any loss is there, only income from such activity you should consider for deducting. This loss you cannot write off from business income, or you cannot write off from capital gains, or you cannot write off from income from house property. Race courses, race horses, or any other these kinds of losses you have to write off from only these kinds of activities only. And that too up to 4 years you can try to carry forward the losses. More than 4 years you cannot continue those losses in your books. So this is regarding rules governing set off and carry forward of losses. Did you understand what is set off and what is carry forward of losses?
Yes, sir.
Yes.
Okay, Naganjit, you understood now?
Yes, sir.
Okay. Now coming to another topic is there for you. That is deductions under our next topic is this one. Deductions out of gross total income under section 80G to 80LA. Okay. These are the various kinds of deductions. You have to, in examination, if they ask, you have to write these 13 points. Whether you explain in detail or not, that is left to you, but you should write these 13 points at least 10 you should remember. 80G, you know it, donations, you know it in individual assesses also, we have seen 80G donations. Again, in donations also, different kinds of donations are there. 100% donations in the previous classes, I discussed with you. NDRF, National Disaster Response Force, or NRDF, National Rural Development Fund, whatever donations that you give to those organizations, those funds, 100% that is allowed as a deduction. Okay, other National Defense Fund is there, Prime Minister's Drought Relief Fund is there. Likewise, several funds are there for which if you donate 100% deductions will be available to you. So first one is under 80G, donations under 80G. Okay. Then second one, deductions under section 80GGA for certain payments that you make. So what are the certain payments? See, I will tell you only 2 examples. They are enough for you. Okay. To an approved research association, if you donate amount, that will be allowed as a deduction according to this income tax. Okay. Similarly, if any institution or association who is functioning with the objective of training of persons for implementing programs of rural development. See, the country or the government wants to develop rural areas in the country. So whatever organizations that are running for the purpose of development of rural areas. If any persons are being trained under those organizations, if the company donates certain amount to those organizations, that will be deducted under 80 GGA. Please remember. Okay. Then similarly, in the previous classes, I mentioned political parties. For political parties, whatever donations that is given, that is given under section 80 GGB. Please remember. 80 GGB. Any donations that a company assessee makes to political parties, that is allowed as reduction under section 80 GGB. Please remember. Yes, did you catch my point?
Yes, sir.
Okay. Similarly, please remember, another question will come to you. That is, in cash, if they donate, is it deductible? Suppose a company is claiming that I have paid 1 crore rupees to certain party in cash. They brought the receipt from that party's official register only, a receipt book only. Is it allowed to be deducted from the gross total income? Yes?
Yes, sir. Yes, sir.
No, please remember. From the year 2014-15, cash transactions are not allowed under 80 GGB. Please remember, prior to year 2014-15, it was allowed. Now, if a company donates money to political parties, only with the help of DD or only with the help of check or only with the help of online transactions only they should do. Physically, if cash is given, income tax authorities will not allow it as a deduction. Please
Sir,
remember
what
it.
about this electoral bonds?
That is different. No? That is bond. That is investing in bond. But this is donation.
These electoral bonds are not related to this political party. No?
See, what you are doing is electoral bond. It is issued by the Election Commission of India. No?
Yes, sir. Yes, sir.
That is different. No? You are investing. You will get interest for that. But here, what you are doing is you are donating to a political party. You will not get anything. Directly, you will not benefit. Simply, out of what you call, I should not say it officially, but I am saying quid pro quo, you will say, no? If I give to you this, the person is, the company is going to expect something in return from the political party. If at all the company, if at all the party comes to power, they may do some favor to this company. In that way, we are donate. Or in certain cases, suppose a political party is enjoying power now. If you donate money to that party, they will not involve these companies in criminal cases or civil cases or whatever it may be. If at all any case is lodged against the company, the party is in power, no? They can see to it that the company is not in danger in that particular case. Did you understand?
Yes, sir.
So these sections you please remember. See, 80G, you know, 80GGA. Another thing I want to tell you in examination, don't write wrong sections. If you remember the section, you write it exactly. If you do not remember, please don't write sections. 80GG. Only if you remember exactly these sections, you write. Otherwise, no issue. Simply mention this, that's all. Under section up to 80, you write. Under section 80, donations. Under section 80, for certain payments. Under section 80, donation to political parties. Like this you mention. Did you understand?
Yes, sir.
Yes, sir.
Now, next one, under section 80 IA. This is IA, not 1A. Under section 80 IA, to infrastructures undertakings, if a company donates, that amount will be allowed as reduction. See, infrastructure, what do you mean by infrastructure?
Infrastructure means providing the facilities for the building, like fans,
for the
electricity.
very good basic facilities like road transportation or rails or communication or banking sector or insurance sector, or you mentioned no buildings for the development
Yes.
purpose. Okay, this is all what you mean by saying infrastructure. So if at all any organization is involved in infrastructural development pertaining to the country, if the company donates certain amount to that infrastructure organization, that will be allowed as deduction under section 80IA. Okay, then the next one is 80IAB, that is says special economic zones. You know about it. The government across various places in the country has established special economic zones. Okay, there exclusively certain area is demarcated for production purposes, for the establishment of factories. For economic development of a country, production is important, because for even after nearly 80 years of independence, the country cannot be allowed to import all the goods from foreign countries. That is why the Honorable Prime Minister launched Make in India campaign. Previously, it was Made in India. Now it is Make in India. Even foreigners are being asked to establish organizations, establish factories, establish various kinds of industrial establishments in the country, so that the Make in India is fulfilled. The ambition of Make in India is fulfilled. Do you
Sir,
know Make in India campaign? Yes.
Sir, is the Make in India purpose is achieved?
Very good. Make in India is mostly achieved, I feel, Subramaniam.
Because of the, I mean, lack of supervision. Some in some areas, Make in India has been failed, as the opposition parties and all others are abusing them, sir.
Okay, very good. In your sentence only, the answer is there. In some areas you mentioned, in some areas only it failed. Okay, you know it. If any opposition party will criticize the party in power, that is natural. See, out of 100 marks, even out of 100 areas, even if in 5 areas, if the government fails, the government which is in power, the political party which is in power fails, the remaining opposition parties will criticize the government. That is natural. But see, once see the history. The just yesterday only economic survey was released. Today only budget is presented in the parliament by the Honorable Finance Minister Srimati Nirmala Sitharaman. See how economic survey has glorified our economy. Actually, exports are increasing. The the country is coming out of COVID related issues, and even the country is coming out of Russia-Ukraine war threats, war, whatever that is going on in the rest of the world. The economies are in a downtrend, but Indian economy is growing. The one reason is Make in India. Please remember, Make in India is a success story. Actually, it is not a failure story. Okay. Okay, Subramaniam, are you satisfied?
Sir, it's a long debatable topic, sir. We will discuss later.
Yes, it is a long debatable topic. So that is why we will not discuss deep into that topic.
Yes,
We will
sir.
not
Yes.
deep into that. Okay, but as far as I am concerned, that is what you that is I feel that it is a success story. But
Yes,
but
sir.
you mentioned it is debatable. Huh? Okay. Now coming to next one, profits from new industrial undertakings. So if deductions for setting up, this is not profit. Please remember, you correct it. Deductions for setting off new industrial undertakings under section 80 IB. Okay. So in certain cases, government is encouraging setting up of new industrial undertakings. Like for the country's development, we require. See, what is the biggest importing item in our country? What we are importing in large number? Crude oil you are importing. Crude oil, from which petrol will come, from which diesel will come.
United Arab Emirates.
Okay, crude oil we are importing. See, so those organizations, those industries which are involved in refining mineral oils or
Sir, even the edible oils also we are importing, no, sir.
yes, sir. Yes. So the edible oil, it may be edible oil or crude oil or storage plants or what you call development of a housing project or a hotel or operation of a ship or scientific and industrial research development undertakings. To all these kinds of undertakings, if a company donates amount, that is deductible under section 80 IB. Okay. Did you catch my point? So whatever industries set up for just now I mentioned, no, for those purposes, if at all any business organizations are established, if any industries are established, if a company tries to donate, if a company donates, if a company donates amount to those industries, that is deductible under section 80 IB. Okay. Now next one, see similarly here also in industrial undertakings, different things are also there. That is hilly areas, likewise in hill stations, like different kinds of things are also involved. So, but for you, as far as you are concerned, you just write this. Then profits from next one is profits from housing projects. This is not profits. See, this also you write off. Deductions in case of donations to housing projects, like this you change it. Deductions in case of housing projects under section 80 IB A. 80 IB A. Okay. So in our country, certain organizations are working for the establishment of housing projects, because even after nearly completion of 80 years of independence in our country, several people are there who are staying in the country without homes. So certain companies are established, certain organizations are working for the construction of houses in the country. So for those organizations, for those undertakings, okay, if a company donates certain amount, that amount will be deducted under section 80 IBA. 80 IBA. So next one is deduction. The next case is deductions to developers of special economic zones. Sorry, that is over, no? So deductions for setting up of undertakings in special states under section 80 IC. So there are certain backward states in our country, you know it. What are the backward states? You take the case of northeastern part of our country. Seven sisters of the northeast, you will call it as Mizoram, Assam,
Yes,
Meghalaya. These seven states are there. Like that, those some special states are there in the country. At those places, in those places, if any industries are ready to be set up by entrepreneurs, if for those entrepreneurs, if a company donates money, that will be allowed as deduction under section 80 IC.
sir, if you see the 10th point, but special states in northeastern states are different, no, sir.
Oh, again, see, you can see it is IE 80 IE is mentioned. Okay, here also setting up undertaking in case of 80 IC.
Sir, if Jammu Kashmir will come under the special states.
Oh, Now it is not removed. No, now it is not continuing as a special state. No, that is
Yes,
that
sir.
is that is removed.
Yeah.
Okay. Okay. Now, okay. So separate point is there. No, here. So other states are there. For example, I mentioned now other states are there which are backward. Let us take for example Himachal Pradesh is there. That is not seven sisters. That is not part of seven sisters of the northeastern states. Okay, Himachal Pradesh is there. Similarly, Uttaranchal is there. That is also backward state. So these are special states, states under Section 80 IC. Okay, so these are termed as backward special states under Section 80 IC. As you rightly pointed out, under 80 IE we have special provisions for northeastern states. Okay, so then coming to deduction in respect of profits and gains from business of hotels and convention centers. So under Section 80 ID also, it's special places mentioned by the government, mentioned by the income tax department. If any business organization comes forward to establish hotels or convention centers in those specified areas, whatever amount that is donated by a company will be allowed as tax deductible.